to the What Bitcoin Did podcast.
Hello, how are you all? Are you all having a great week? Welcome to the What Bitcoin Did podcast. I'm your host, Peter McCormack, and today I have an interview with Bill Barhydt from ABRA. But first, I have a message from my show sponsor, so BlockFi, my friends in New York. If you are a regular listener, you have absolutely no doubt about who these guys are. So much has happened for BlockFi, and we're working on some amazing new announcements for them, which are going to be coming soon. So watch this space. But if you are interested in a crypto-backed loan, well, BlockFi is the leading crypto to USD lender servicing customers worldwide, including 47 US states, and their interest rates start as low as 4.5%. BlockFi accepts Bitcoin, Ether, or Litecoin as collateral. Customers can be funded in USD or GUSD, which is Gemini's dollar-backed stablecoin, and you can go from application to funding in as little as 30 minutes. If you sign up at blockfi.com/whatbitcoindid, you can get $25 in free crypto added to customer collateral loans under $10,000, or $50 in free crypto added to customer collateral loans over $10,000, and applying takes less than 2 minutes. So that is blockfi.com/whatbitcoindid, which is blockfi.com/whatbitcoindid. Also, if you've been aware of the lightning torch, which Twitter's Jack became part of this last week, one of the heroes of that was, his Twitter handle is @fartface2000. What a name, right? He's the guy who originally took the torch from Hodlo Nort, and he's got like a project he's working on, so I wanted to give a shout out to him for that. So his side project is called bitpiggies.com, which is a piggy bank with pre-printed QR codes that correspond to an open dime. The intention of the project is to teach kids to save a little each month, and he is hoping that young Bitcoiners buy them for their no-coiner friends when they have kids. So please go and check it out. It's bitpiggies.com, which is bitpiggiys.com. Okay, so on to my interview with Bill, the CEO of ABRA, and this is a shorter show than normal. It's only about 40 minutes. It was a quick turnaround. You may have seen that they had this big announcement last week. ABRA has a new feature coming to their platform which allows anyone in the world to invest in stocks and ETFs using Bitcoin. So it was obviously a very cool announcement. So I immediately reached out to Bill, asked him if he would come onto the show and talk about this, and we recorded within 24 hours. And I do want to say like a thank you to Ryan Selkis. I pinched a couple of my questions from his interview with Bill when I was prepping. I watched the interview, and Ryan asked a couple of questions that I thought were good that I also wanted to ask. So I've said it a few times, I love a proper Bitcoin company, and you don't get much more Bitcoin than ABRA, where others have tackled their approach using Ethereum. Bill and the ABRA team have decided to build on Bitcoin. So we discussed this. We discussed ABRA's synthetic currencies and all the complexities around their platform and new product announcements. So yeah, it's a really cool interview. If you got any questions about it, feel free to reach out to me. My email address is hello@whatbitcoindid.com. And listen, if you want to support the show, there's a section on my website. Head over to www.whatbitcoindid.com, click on the support section, and there's a whole bunch of things you can do. And I need to say a big thank you to my Patreon top tier sponsors. Firstly, make sure you check out vidyen.com, which is WordPress plugins for advertising and Monero mining reward sites. That is vidyn.com. And check out honeyminer.com, who make mining and earning money simple for anyone with a computer. Okay, listen, I hope you enjoy the interview. If you have any questions, then feel free to reach out to me. My email address is hello@whatbitcoindid.com. Hi there, Bill. How you doing?
I'm doing great. How are you?
I'm pretty good, thank you. So you've had quite a big week.
Indeed. It's been awesome.
So I saw a non-stop stream of congratulations and thanks and people praising your latest announcement on Twitter. And I also watched your interview with Ryan Selkis, which was very, very good. So firstly, I kind of owe you an apology, but you won't realise why. I think I kind of dismissed ABRA unnecessarily. When I was first introduced to it, I took a quick look and I thought, this is just another exchange, and then completely ignored it and completely ignored everything you've done. But you aren't just a normal exchange, are you?
No, we are not. We are probably one of the coolest applications leveraging Bitcoin on the planet, certainly that I've seen, and I'm pretty well informed about our space. ABRA uses Bitcoin tech to basically build the foundations for what really will be a global bank, whether it's for investing, later credit, or payments and money transfer. It's a very unique model. And the good news is consumers are using it. We have hundreds of thousands of users, and it's growing. And you mentioned the response to our latest announcement, which is the ability to use our platform to invest globally in US stocks as well as cryptocurrencies and fiat currencies.
I think that's a very interesting point, actually, because I think there's a lot of comparisons between crypto and the first dot-com era, and where everything was e-commerce and lots of overinvested businesses failed. And then the real kind of surprise was that the biggest businesses came from things which we didn't expect, like social media and search, kind of new businesses. And I think what's happened with crypto, it's all been based on speculation or the expectation that people will use it as a payment channel. But that's really kind of a red herring, really, isn't it? Because what crypto allows you to do is build new models for financial infrastructure, right? And that's what you guys are doing.
That's right. I mean, ultimately, the way I see Bitcoin and crypto in general, but specifically Bitcoin, is as a hard money digital reserve currency. And I'll explain what I mean by that, but also that's programmable. And the programmability of Bitcoin enables what ABRA is doing. Now, the internet itself is quote unquote programmable via TCP/IP, but the average user doesn't have to understand, or probably doesn't even know what I just said or understand what I just said. And I think the same holds with Bitcoin. The average user using Bitcoin 10 years from now will probably either not know they're using it, not even know it exists, or have any technical understanding of what's going on with the banking services they're using that are enabled by it.
Okay. So you think people will still be using fiat, but it will be collateralized by Bitcoin?
I think many applications globally will benefit tremendously by taking fiat currency and using it via collateralized Bitcoin, because it doesn't require banks in the middle of the transaction flow, which has a lot of benefits because it eliminates legal friction, it eliminates unnecessary costs, it can increase settlement times, it can simply increase access, like with our new stock product. Right, we have people now in Mexico, Middle East, India, China, Southeast Asia, who will be able to access investing in U.S. stocks for the first time because of the way we're offering collateralized, effectively, bets on the stock. You simply make a bet using the value of Bitcoin that the price of the Apple shares will go up. If you're in the money on the bet, the payout is in Bitcoin. And if you're not in the money on the bet, the payout is still in Bitcoin, meaning the payout to the counterparty on the bet. And so it's very similar to the idea of what happens when you buy and sell a stock, but it eliminates that friction, because for the person who just wants investment exposure, including getting their dividend payments, owning the physical shares is most often not necessary. And so it really is right-sized for a global audience in a way that has never been possible before, in our opinion.
I guess the only difficulty on that side is that if it is, if you are buying and selling in Bitcoin, you could make the right bet in terms of, say, the Apple stock, but still lose in dollar terms if the price of Bitcoin is falling.
No, in this case, that's not true, because you're actually right. You're actually hedging against both the dollar and Apple shares. So it accounts for the underlying change in the price of Bitcoin versus the dollar, as well as Apple in the case, or in the example that I mentioned before. And so the system is smart enough to adjust for that. And so you wouldn't be taking dollar Bitcoin risk in that transaction, specifically in terms of how ABRA works. Again, it's all transparent to the user. They don't have to understand all that complexity, but it does adjust for that.
Does it adjust both ways? So, for example, if the price of Bitcoin was to shoot up, would you have missed out on that opportunity?
Yeah, if you were no longer just holding raw Bitcoin, sure. So if you basically use your Bitcoin to collateralize the price of an Apple share, then you're only getting the benefit of the movement or fall in the price of Apple, nothing else, 100%. And reconcile whatever currency Apple is reconciled in, which in this case would be US dollars.
Okay, so before we talk about that, because obviously that's very interesting, I think we should go back a step and just do the backstory of ABRA. And actually, I've got a question for you first. I don't know if I told you this. I've actually visited your office, and one of the interesting things is that obviously you're smack bang in Silicon Valley, yet you're Bitcoin based. Almost every other, I think actually you're almost the only business I've heard of that is building this kind of infrastructure in Bitcoin. Everybody else is doing it in Ethereum. What's the reason you've gone for Bitcoin, and what complexities does that have? Like, I'm assuming you reviewed Ethereum.
Sure. I would say two things. I would say most companies are building in SQL, like exchanges, right? So meaning they're completely centralized, And if you're trading crypto, you're not actually getting crypto. You're getting a number in a database and a promise that if you want crypto, they'll give it to you. And so ABRA is actually not using a database to store the value of people's funds. They're actually stored on the Bitcoin blockchain. The blockchain becomes the ledger and the asset becomes Bitcoin. Now, the reason we did this is effectively threefold. First, we needed a digital asset. Let me take a step back to your earlier point about why we're doing this. And then I think that relates to why Bitcoin. We want a single app to become the WhatsApp for money globally. And what I mean by that is you have one app that works in over 150 countries that allows me to make investments, get loans, send money, and basically do all the banking transactions that I would want to do as a consumer in pretty much any country in the world. And there's a lot of reasons why up until ABRA, that was impossible. Legal reasons, technology reasons, liquidity reasons, et cetera, et cetera. And I believe we have figured out how to solve those problems to create that single application. The cornerstone of that is this synthetic asset model that ABRA has created. And what that effectively does is it allows each consumer or each user of ABRA to turn their phone into its own bank, as opposed to ABRA becoming the bank. Okay, that's what the synthetic asset does. Now, to create that synthetic asset, back to your original question, you effectively have to fulfill three requirements. The first is the digital asset, has to be highly liquid and have a very large market capitalization. Because if you have 1 billion people using it, you have to be able to break it up into tiny pieces so that everybody can participate, right? If I'm investing in Apple shares and 100 million other people are investing in Apple shares, you have to have enough Bitcoin or whatever the digital currency is to collateralize those contracts. The second part is you have to be able to get your money out of the traditional system and into the ABRA wallets somehow in every country in the world, right? Whether it's using the digital currency directly or via your bank account, right? And then the third is the digital money has to be programmable to create the smart contracts that we need to fix the value of the digital currency in other assets, which is how the synthetic currency works. You're taking Bitcoin and you're collateralizing a contract using the Bitcoin to give you investment exposure to dollars, euros, pesos, Apple shares, other altcoins, whatever it is you're holding, okay? And when we started ABRA, Bitcoin was the only technology and network in existence that met all three requirements. I would say that Ethereum now meets those requirements, but I would say that in terms of hard money, Bitcoin is a safer bet. And also the complexity of developing in Ethereum is much, much higher in terms of what ABRA's system is doing. And so in that regard, Bitcoin is a safer bet for us.
Wow. So I've written down 7 questions from that one section. Okay. So we're gonna have to work through them. Okay. So the first thing that struck me then is that you can have synthetic currencies, right?
Yeah. Everything in ABRA, unless you're just holding Bitcoin, is a synthetic currency based on Bitcoin. Everything, no matter what asset you're holding.
So I interviewed Zach Prince from BlockFi. You probably know Zach. Mm-hmm. And one of the things we talked about is they provide loans, but they do it. You can have it in GUSD, the Gemini dollar stablecoin. And the reason he explained that to me is he was talking about how much people borrow dollars around the world. And in a country like Argentina, people want to borrow dollars because it's a more stable currency. And they're going to use it to counter the impact of the fall in the value of their own currency. So are people using ABRA as a way, similar to what we've heard about in, say, Venezuela? Are they using it to deposit their own currency and kind of hold dollar? Almost like using you like a stable coin?
Yeah, they are. They are. So we have a lot of people who, from China, from Venezuela, from Argentina, actually from countries all over India, all over the world, who are depositing Bitcoin into ABRA and then converting it to dollars because somehow they were able to convert their home currency into Bitcoin put it into ABRA, convert it into dollars, and then effectively get a free hedge versus the falling value of their home currency versus the dollar, which is effectively what you're saying, right? And so we have a lot of people who do that, and we love that. I mean, that's a great use case for ABRA, and it's a great on-ramp as well at the same time.
And how much of a threat are you to the traditional banking system?
I don't think that ABRA is going to kill US banks or Western banks or large Chinese banks. Okay, I don't have any delusions about that. I think what we're doing is we're leveling the playing field in terms of global access, right? So people all over the world, and there's a few billion people who simply don't have access easily to invest in the kind of assets that ABRA is providing, because the amount of money they'd be investing would be too small. You can't buy an Apple share if you want to invest $50. It's not possible. But with ABRA, you can, right? So you can actually do micro investing or fractional share investing. And so those are two reasons why ABRA is really interesting. One, we provide access in hard to reach places. And two, you can do small dollar investing, right? And three, if you're a Bitcoin believer and you want to make deposits and withdrawals into and out of ABRA using Bitcoin, you can actually do so in a way that doesn't require ABRA to know who you are, because you're holding that Bitcoin in your ABRA wallet. And when you make the investment, you're actually not giving the Bitcoin to ABRA. You're actually holding on to it, and the smart contract that you're entering into locks that Bitcoin effectively on your phone, so that neither you nor ABRA can touch it until that investment settles. And so that gives you ultimate privacy and ultimate security and control over your money. And we think that is the future of banking, not giving your Bitcoin to a centralized exchange, which effectively is no different than a traditional bank anyway.
Okay, so you're actually delivering on the that crypto term, be your own bank. You're actually delivering on that.
Absolutely. It's a significant tenet of our core beliefs at ABRA.
So it's almost like people will have two banking relationships. They will have their traditional kind of high street bank, probably for managing their salaries and their mortgage payments and things such as that. And then they'll have this kind of personal bank, which is their access into a kind of global digital financial infrastructure.
Absolutely. And we think that this collateralization of real world assets acts as the best gateway into the digital realm in a way that doesn't require people to overtly make a bet on Bitcoin that they don't understand.
Quite an infrastructure you must be building.
It's astounding. We spent 2 years just building stuff before we were able to launch, because think about it. We've effectively figured out how to create a synthetic version of any liquid real world asset, right? I don't know of anybody else on the planet who's been able to achieve that. And we've done it through sheer force of will, of understanding how Bitcoin works, how complex financial engineering works in the real world, merging the two, right? So not only do we have a complex engineering infrastructure, we also have to run a trading desk to manage our counterparty risk on those smart contracts. And we effectively run a model that neutralizes all counterparty risk to ABRA on those contracts at relatively low cost. And we have to do that because otherwise, if the price of Apple goes up 1,000-fold and I have to give the consumer that much more Bitcoin and I don't have it, well, it would be unethical for me to enter into that bet with the consumer in the first place. So in order to eliminate the risk in both directions, ABRA has to hedge away that risk in real time. That would be unethical of us not to do that from the consumer's perspective. So that's a very sophisticated piece of the business in and of itself, independent of the technology. It just works in concert with the technology. You can't have one without the other. So what we've built is totally unique and really lays the basis for the next generation of banking. Look, the average consumer has no idea what happens to their money in money market accounts. They don't know what happens in repo markets. They don't know how money markets work, et cetera, but yet they still use the bank. What we're doing is infinitely better because we're saying you're in control of the keys and you get to decide how you use the keys that you're controlling. If you want to invest in stuff, ABRA will be the counterparty. And we do disclose, right, how we basically hedge our bets so that we can make you whole. But now the consumer has the control over that collateral. And I think that's an infinitely better model long term.
How do you hedge? Are you buying or short selling the underlying asset?
In logical terms, yes, but it's a little bit more sophisticated than that because that would be very expensive. So there's a lot of ways similar to your CFD markets in the UK or the ability to borrow shares the way hedge funds would do that give us 100% coverage on the movement of the underlying assets without having all of that cost so that we don't have to pass that cost onto the consumer unnecessarily. And so the only challenge in the ABRA model is the catastrophic failure of Bitcoin, meaning if Bitcoin goes to zero quickly, our model breaks down. And so that is, at $60 billion, that is highly unlikely to happen. But our users are protected even if Bitcoin is, like last year when Bitcoin fell 85%, our users didn't lose a penny. More importantly, to our future, to be able to support our users, we didn't lose a penny either while we were making all of our users whole. So the system works. We've proven that it works to the tune of almost, I think, over 800 million so far in transaction volume that's flowed through the system since we launched it about 14 months ago.
So you could end up delivering quite a bit of volume to the Bitcoin blockchain.
Yeah, so somebody wrote an article on Forbes yesterday, and the title was more or less, this ABRA app could actually significantly drive the price of Bitcoin higher. And think about it, right? So if we're collateralizing every single asset on the NASDAQ, and then later, let's say on the Shanghai, and later on the London exchanges, and making those available to consumers in 155 countries, right? There's not enough Bitcoin to collateralize all of those investments. So what's the implication of that? Well, the price has to go up if everybody's trying to collateralize their investments at the same time. That's really interesting. Mm-hmm. And that's part of what makes ABRA such an interesting use case for Bitcoin. Not only does it make Bitcoin easily usable for the average consumer, it also makes it really interesting for institutional investors who stand to profit tremendously from the model.
Next up, I talked to Bill more about ABRA and the complexity of building on Bitcoin, but before that, I do have a message from my show sponsor, BlockFi. So what can I tell you about these that you don't already know? You know they have the single best crypto-backed loans product on the market. You know they raised a boatload of cash to work on new and exciting products. You know that their website is super easy to use. You know that they have amazing customer service. I've been telling you the story of BlockFi for months. Can't tell you too much more about the product, but what I can tell you about is my relationship with them, because it's one of the reasons I believe in the company so well. They don't just send me money each month and I write the ads. They fully include me in everything they're doing. I get advance notice of news and products. I get advance access to their products to test and provide feedback, and they have listened to the things I've said. They also help me in other ways. They've connected me with companies and guests, and we've built this very tight relationship whereby I guess they want to help the podcast grow and I want to help them grow. I can reach out to Zach, the CEO, at any point and it will come back to me, usually within a day. It doesn't matter what I'm reaching out to him about, whether it's about their product and what I'm doing with the podcast, and he's very supportive. Of course, they want you to consider them if you want a loan, but they also want to grow the space and they also want to support the community. So yes, a big shout out to Zach, Brad, and Flory for everything. And listen, if you are interested in a crypto-backed loan, well, BlockFi is the leading crypto to USD lender in the US, servicing in over 47 states, but they do also service customers worldwide, and they have interest rates that start as low as 4.5%. BlockFi accepts Bitcoin, Ether, or Litecoin as collateral. Customers can be funded in USD or GUSD, which is Gemini's dollar-backed stablecoin, and you can go from application to funding as little as 30 minutes. If you sign up at blockfi.com/whatbitcoindid, you can get $25 in free crypto added to customer collateral loans under $10,000 or $50 in free crypto added to customer collateral loans over $10,000, and applying takes less than 2 minutes. So you know the drill. Check out blockfi.com/whatbitcoindid, which is blockfi.com/whatbitcoindid. But we have a fee market within the Bitcoin blockchain. If you start delivering significant volume to it, how's that going to impact you if the fees started going up to $20, $30, $40? Is that a problem for you guys?
Yeah, it is. It is. If we don't make any changes, it is. And so our intent is to leverage these new first and second layer technologies over time. We're supporting SegWit, of course, on the first layer, and we want to support Lightning on the second layer. And if we effectively turn ABRA apps into quasi Lightning nodes or allow them to connect with other existing Lightning nodes, that should dramatically lower the fees that we have to settle to physically on chain. There are instances where we absolutely have to settle physically on chain, depending on nuances of what the consumer is doing, and I won't bore you with that. But by and large, we should be able to use those technologies correctly to dramatically lower the fees that we're paying on average. So if fees skyrocket on chain to, let's say, $50, like you said, that should be amortized across lots of transactions because of the way we're using layer 2.
Right, okay. Have you guys looked at Liquid, the sidechain from Blockstream?
Yeah, not only that, I'm going to hang out with Samson here in Mountain View today. And we are familiar with it. I love what Blockstream is doing. I think it's really astounding. I'm big fans of them, and they really build for the right future. And of course, they're making a huge bet on that future. But I love it, and we need that in our space. ABRA is really looking for the consumer applications of that infrastructure, and Blockstream is building very complementary infrastructure. And so I'm excited about that. And so, yeah, big fan.
Yeah, me too. Samson's been on the show twice, and I've had Adam on. I'm a big fan of Blockstream as well, and I don't know too much about Liquid. I had a small look, but when I was reading about ABRA, I was thinking it, and I listened to your interview with Ryan, and it was talking about the potential on the blockchain. I was thinking, I do wonder if Liquid is something relevant to you. And another point, like I mentioned, obviously this is some huge financial infrastructure, and it isn't an SQL database. You are dealing with an immutable ledger, essentially. Are there things that kind of keep you up at night and worrying? Are there kind of potentials for catastrophic bugs which have some kind of cascading effect which is dangerous for your business?
I worry about that. I do, honestly. Look, I think the core dev team for Bitcoin has made no bones about the fact that security and reliability is priority one for them. And anything related to scaling transaction volume is a distant priority two, if that. And that's, I think, comforting in terms of knowing that the likelihood of catastrophic bugs entering the system is very low. On the other hand, even in that layer 2 model, eventually we're going to need more on-chain scaling. Now, other modifications to layer 1 coming out over the next 24 months should address a lot of that. But eventually it'll also have to be addressed via block size, I believe. But all of that having been said, I am extremely bullish on Bitcoin's roadmap right now. I have no explicit reason for concern other than it's my job as CEO to worry. I mean, we've made a bet on a technology to run our business that we simply don't control, right? And we accept that. We knew that with eyes wide open coming in, but it's the right bet. It's the bet that basically says no government is going to be able to stop this at scale. And it's the great leveler in terms of financial services. The same way that BitTorrent was the great leveler in terms of being able to share data, right? And so, we'll see if we're right on that bet. I think we're right, whether ABRA is ultimately right or not. But time will tell.
Why do you think more companies aren't building on Bitcoin in a similar way to you are?
I think it's too hard for most companies. The Bitcoin is not a Turing complete scripting environment, right? I mean, it's got 10 opcodes, and Ether itself is Turing complete. So building complex systems in Bitcoin is very, very difficult, right? You can't have an on-chain multi-sig self-settling smart contract in Bitcoin. It's just impossible. You need an external oracle with an external data model, and the scripts can be on chain. All of that can more or less be done on-chain in Solidity in Ethereum. But I would also question the complexity of those smart contracts versus where we are now in the evolution of the cryptocurrency market. So, it's a trade-off between flexibility, security, and your requirements, right? Bitcoin is perfect for the type of investment contracts and synthetic currency that ABRA is building. It does exactly what we need, no more and no less. If you're building very sophisticated derivative products like a DY, DX, or DAI, and all that stuff, you probably need Ethereum to do it on chain. But that's not what ABRA is doing.
Are you using full smart contract functionality within Bitcoin? Because we keep hearing about all these smart contract platforms and how amazing they are. And then the Bitcoiners will come back and say, well, smart contracts have always been available on Bitcoin. And I've got a smart contract show coming up, but I'm yet to do my kind of full research on it. Are you using full smart contract functionality?
Yeah. Well, in the sense of we take advantage of the opcodes that Bitcoin provides to build multi-sig contracts, the answer is yes. But Bitcoin doesn't provide for self-settlement in the way that Ethereum does, right? You basically need to proactively sign from the physical world into the digital world. And so the multi-sig contract in Solidity and Ethereum can be done inside the contract itself, whereas in Bitcoin, it can't be. So you have to basically create a multi-sig wallet effectively to encapsulate the business rules so that somebody can't steal the assets that are put into a contract. And so it works a little bit differently in the Bitcoin world. And so the other piece of that is that if the contract has anything to do with the physical world, such as the price of an Apple share, you need an oracle function, which is some neutral third party, to determine the outcome of the contract. And because Bitcoin has no knowledge of the outside world, this oracle always introduces a trust element that you just can't avoid, right? And that's true of any cryptocurrency application that integrates with the physical world. And I think that's a misnomer about what smart contracts can do, can't do in terms of the theory and academic perspective versus the reality. You simply have to have a trusted third party inject the key information to determine the outcome of a contract. So for example, if you put $1,000 into Apple shares in the ABRA app, somehow that Bitcoin contract needs to know the price of Apple shares at the time of settlement, right? Meaning, what's the payout? Well, the payout is dependent upon the price of Apple shares at the time you entered in the contract versus the time you exited. Well, Bitcoin has no knowledge of the outside world, so how could it possibly know the price of Apple shares? That's accomplished via this idea of a contract oracle, and there's no way around that in the Bitcoin world.
So interestingly, when you posted this up on Twitter yesterday, the first comment that came out was, "Is this legal?" And I'm trying to remember the name of the platform. There was one that was shut down by the US, which had a similar business.
Yeah, Broker One, I think, is what you're referring. Yeah.
So what is the difference between you and them?
Broker One was effectively running a centralized CFD swap execution facility in the US, or in the UK, but servicing US customers, which is illegal in the US. CFDs are illegal here because, for the Brits that aren't aware, because effectively the US has federal rules against gambling and allows states to basically regulate it on a state-by-state basis. And so what ABRA is doing is not a centrally cleared CFD model, right? You're basically running smart contracts where you are holding your own crypto as collateral. There is no margin trading. Everything is 100% collateralized. And again, using these multi-sig Bitcoin scripts. It also turns out that the regulators make a distinction between contracts that physically settle and contracts that do centralized kind of net settlement in cash. And there's lots of reasons for this. I won't bore you with. Some of it has to do with farming regulations and things like delivering barrels of oil and whatnot. And so because these transactions at ABRA all settle physically on the Bitcoin blockchain, we can prove that for every transaction, right? It also is exempt from a lot of that kind of regulation, which deals with kind of central clearing and in the US, what we call swap execution facilities, which is a subset of CFDs in Europe. So it's a complex model and framework that the government has provided, but we've spent years navigating it to come up with a model that ourselves and our lawyers believe is easily provably legal.
Right, okay. You must have some very good lawyers then.
Very good lawyers, very well paid. Unfortunately, it's cost me a lot of money to get to this point, but I think in hindsight, it's been worth it.
Well, I think if you get this right and you do create this global infrastructure for banking, I think those fees might end up looking quite small, and you could end up being doing quite well out of this. Can you tell me about who's backing you?
Sure. So we've raised I think about 35 million in venture capital, venture funding from myriad sources. First Round Capital, which is a very well-known venture capital firm here in Silicon Valley, American Express, Arbor Ventures, which is mostly money from Fidelity, the U.S. mutual fund company. Then we have also funding from Foxconn, the company that manufactures, among other things, the iPhone, and several venture capital funds in both the cryptocurrency space, such as Blockchain Capital, Pantera, and others, and then some New York City-based venture capital firms as well. So it's a really great group of investors who provide a lot of value to us. American Express has been a great partner, for example, and we've worked with them closely on a bunch of different areas since they funded us over 2 years ago.
Do you envisage much competition in this sector? Because I saw recently currency.com, who feel like it's a similar sell to the user, but probably built in a very different way.
Yeah, I have heard of them. I haven't looked at it, to be honest with you. I'm going to, but I haven't gotten a chance yet. Of course, there's going to be a lot of companies trying to do this because the problems that we solve via this model are tremendous. And that just makes sense that if ABRA is successful, just like any successful startup, that other companies will try to replicate or copy you. I think that in the case of ABRA, the technology stack is so complex that we do have a couple of years head start there. We'll see what happens over time in terms of other companies, being successful trying to copy. But I think it's more likely that companies may take a similar approach, but solving kind of tangential business problems, such as business payments or, B2B lending, and not necessarily go after the consumer problems that we're trying to solve. But I think this whole idea of crypto collateralized contracts is going to explode. And I don't think ABRA is going to have a monopoly necessarily on that model. I do think we're going to be the first successful company to do it for consumer retail banking applications.
Can you think of like other businesses or other business models that this could disrupt as well? Or would you keep that a secret because you're looking at it?
No, I think trade finance is interesting. I think large business-to-business payments is interesting. These are things that ABRA is unlikely to tackle, right? At least in the near term. So I think I also think there are certain types of derivative models that could benefit from this for people on Wall Street doing financial engineering. Those are all outside the purviews of what we're looking at and the kinds of business problems we're trying to solve. But yeah, there are more problems that can be solved with this synthetic asset model than just consumer retail banking.
But you're obviously, Bill, quite plugged into Bitcoin, quite plugged into how you envisage Bitcoin can be used and the future. And we've gone through this bull market of stupidity and stupid ideas and poor investments, and we've got this bear market, which, by the way, I've got to the point where I'm now enjoying it. I've financially survived it, and I'm now starting to look at a company like yours and realize what a great business model. If we start to consider this as like a phase in crypto, What do you think is important for the next phase in crypto in terms of the kind of businesses that get developed, the kind of investment that happens? Where do you think we could do a better job?
We need real world applications, ABRA, for example, scaling infrastructure, the picks and shovels businesses, all to kind of work in concert so that they're adding complementary value. ABRA doesn't have a plan B. We're all in on Bitcoin, right? Mm-hmm. So we need the core roadmap to work. I actually would posit that they probably wouldn't agree, but I think to a large extent, beyond just waiting 25 years for Bitcoin to become a reserve asset, they need ABRA to work or applications like ABRA to work, because we're actually getting the mainstream consumer who doesn't understand public-private key cryptography into Bitcoin in a way that they can't do otherwise. And so, I think the most important thing for Bitcoin over the next couple of years and this year is to start to look at real world applications that make this useful for the average consumer.
Right. Okay. And before we finish up, because I'm sure you're very busy, and I usually do this at the start, but you've got quite an interesting backstory, haven't you?
I've been very lucky in terms of being able to do lots of interesting things throughout my career. A lot of them have led to, the technical knowledge and wherewithal that I needed, both from a financial engineering perspective as well as an internet perspective, to be able to build ABRA. And so I'm really grateful that I was able to spend time working at Goldman and the work I did at Netscape and in the .com days. But yeah, it's been a really fun and gratifying career.
So what's coming up for ABRA that's the most important things, and what should people keep an eye out on? And when can people access and start having a play with the new product?
Yeah, so they can download our app now. They can use ABRA to invest in fiat currencies and other cryptocurrencies. There's about 30 cryptocurrencies supported and 50 fiat currencies supported. They can sign up to get early access and zero fees for the stock products and commodity products right now at abra.com. Those features should be rolled out over the next few weeks in short order. And we'll update people via email as we get closer to turning the switch on those features. Then in the coming months, you're going to see some new credit products from ABRA. You'll see more equity products from ABRA as well. And we're not going to stop. We're just going to keep making the app more useful and hopefully easier to use at the same time.
Will you be building professional trading applications and desktop-based applications?
So we are launching a web interface at some point in the next several weeks to ABRA. It will work very similar to WhatsApp or WeChat, where you basically scan the barcode on the screen to link the phone, which is way more secure than just having a web interface into a database, because phishing becomes impossible. And so it's taken a while to develop because it's very hard to get behind the scenes to create a super simple user experience, but we think we figured it out. So that's something that we're very committed to launching in the next few weeks.
And do you get enough sleep?
No, but that's okay. It is what it is. I love sleep. I just don't get enough.
Yeah, I know. Well, listen, look, I really do appreciate you giving me this interview at short notice, because it was a quick turnaround. If I'm ever in the Valley, I'll give you a shout out. Perhaps we can meet in person. And please do say hello to Samson for me. And how can people stay in touch with you, and who do you want to hear from?
Sure. On Twitter, I'm Bill Barhydt, BILLBARHYDT, my last name. And of course, they can download ABRA by just going to abra.com or their favorite app store. And they can stay in touch through those social media and blog channels quite easily.
Brilliant. Well, listen, good luck with this. It sounds amazing. I think I'm going to have to download it again and have a proper look at it. But have a great weekend, and hopefully I'll speak to you soon, Bill.
Fantastic. Really enjoyed it. Thanks for having me on.
Okay, so what did you make of that? some pretty cool and interesting stuff that ABRA is building right now. This bear market might have been rough, but there are some jewels in the crypto economy which are starting to shine through. I've got a massive interest in Bitcoin companies that are building value. I'm a big fan of Casa and BlockFi, and now I think I can add ABRA to that list. For Bitcoin to grow, I think it's super important for companies to be building value and merging the Bitcoin and non-Bitcoin world, and ABRA is a good example of a company trying to do this. I do think there are questions over the product. I think there are questions over the legality of it. Bill's pretty confident that he's got the right lawyers and they've navigated this, but I wouldn't be surprised if the regulators take a look at it. And yeah, there's some complexities around the product, but the size of the market here is potentially huge, and I like the idea of democratizing investing globally. Pretty ambitious, but it's definitely worth keeping an eye on. I would definitely download the product and take another look. As ever, if you've got any questions related to the interview, you know you can reach out to me. And again, listen, I want to thank everyone who supports the show, from guests to listeners to sponsors to everyone who shares it. It's been an amazing ride so far. I had another record month in January, 121,000 downloads, record revenues. I didn't get record profit because I spent a bit of money going out to Tone Vays conference. The latest income report's up on my website if you want to check that out, get a bit of transparency behind what I do and how I do this. It's up there, and you can ask me any questions if you've got any. But if you do want to support the show, there's a whole bunch of things you can do. I'm going to repeat what I tell every week because it's really helpful and it really supports everything I'm trying to achieve with this podcast. So firstly, as I keep saying, the most important thing you can do is listen to the ads. That's the main revenue stream. If people aren't listening to the ads and they aren't successful, I won't have any advertisers, and I'll probably end up without a podcast, and I'll be homeless, probably become an alcoholic or get a drug addiction, and then I'll slowly wither away. So definitely listen to the advertisers. And listen, look, if you don't want to listen to the ads, you can become a patron. It's only $5 a month and you can get the podcast early. You can get it before other people and you can get it ad-free. I've got 76 now, which is madness, so thank you to everyone who does do that. And if you don't want to use Patreon, I know not everyone does, I have a few subscribers who've paid for the year in crypto, so if you want to do that, I'll give you an address to pay and I'll add you to the distribution list. There's also a tip jar. It's unbelievable. I didn't want to add that, but I have got it there. I've been tipped like a couple of $1,000s in total now, which is absolute madness, but thank you to everyone who does that. That's up on my website. If you want to become a show sponsor, then reach out to me on hello@whatbitcoindid.com. We can organize a call and have a discussion around that. As you can see, downloads are growing every single month. It looks like February might even be a record month based on what I've got so far, which is pretty cool. You can leave me a review on iTunes, or you can click on the subscribe button. That helps with my ranking in iTunes. You can follow me on social media. I'm at What Bitcoin Did on everything, on Medium, on Twitter, on Instagram, but I do have a personal Twitter account, which is the main one I use, which is at Peter McCormack. DMs are open. Always feel free to reach out to me. You can check out my website, which is www.whatbitcoindid.com. I'm working on my training course on there, and you can also subscribe to my newsletter there as well, and you can share this show out with your friends and family. Okay, I've got lots of cool interviews coming up, a few kind of amazing ones I can't really talk about just yet, but I do have an interview coming out on Friday with core developer Matt Corello, looking at Bitcoin and Lightning Network tech. So that's very cool. Anyway, have a great week. If you want to reach out to me, my email address is hello@whatbitcoindid.com, and I look forward to hearing from you.